All right, so again, welcome back to chapter 5.6, periodic inventory weighted average costing method, okay? Now, we've already covered the first two, right? We did FIFO on Tuesday. Wednesday, we just looked at LIFO, so today is weighted average. Exactly how it is mentioned, weighted average, okay? So that means, what does that mean? If you think of it in real life terminology, you're expecting to spread the cost evenly throughout all the total quantity, right? You're getting the average of the item, okay? So that's how we're gonna cost out our method, all right? So these are the formulas. Here is the huge difference, okay? You still have your purchase price, which is your quantity times your unit. You still have your total cost, which is going to be your purchase price plus your freight. The difference here is your average cost per item. That's what's going to be different. In this case, when we talk about weighted average, again, we don't care which batch came first. We don't care which batch came last. All we care about is this average cost per item, because instead of, selling up one of the products at a higher price or selling the products at a lower price, because prices, they fluctuate in the market, right? You're never going to have something that's constantly the same price throughout time because, of costs and supply and demand, right? If there's a lot of supply and there's a lot of demand, then the cost is lower. But if there's not enough supply and a lot of demand, then the cost will raise higher. That's just the way that the market fluctuates. But we're not here to talk about the market. We're here to talk about what ways can we take a product, right? And as we keep purchasing them, how can we average out the cost so then it's a stable, constant number. That is, if we have something expensive and we have something that's very low in cost, what is the midway point? And that's what average means, right? It's the midway point, the point where it's not high and it's not low, it's just right in the middle, okay? So that's why this average cost per item formula is going to be your total cost divided by your total quantity, okay? And I'll show you exactly what that means when we dive into the scenario, okay? And of course, the goods available is going to be the same, right? It's going to be your beginning balance plus your net purchases. And of course, your cost of goods sold can be either or your goods available minus your ending balance, okay? So everything is the same except for your average cost per item, okay? So once again, let's go ahead and take a look here. So the first example here, on June 1st, you made a purchase of 100 toys for $1.25 with the freight costing $25, okay? So again, you journalize it just as normal, right? The journal will always stay the same. The only difference is the number that you're calculating can differ depending on what it is. Now, in this case, all purchases are all going to be the exact same throughout whatever costing method that you use. The only difference is when you wait to the end of the accounting period and start costing it is what's different, okay? So in this case, there you go. So that means I'm going to go ahead and plug it in. So again, same thing, right? My purchase price, my total cost is all going to be the same formula. So 100 at $1.25 gives me $1.25 plus my 25 to give me a total cost of $1.50. Now in this case, right, this is our assumption. If you only have one batch and one batch only, then your average cost per item is going to be this one batch of inventory. So rule of thumb here is, yeah, you should calculate the cost per item if you know for a fact that this is the only batch of inventory that you have. But for this example, right, we're going as a scenario where we can see that we will be making future purchases, then no, you don't necessarily need to solve for the cost per item because that's not what we're solving for. We want to solve for the total cost divided by the total amount of quantity. So in this case, for practice purposes only, let's go ahead and do it for the first one because we're assuming that this is the only batch of inventory that I will have. So I will calculate this, which is the total cost of 150 divided by that 100 units will give me $1.50. Okay? So then the next couple days later, on June 11th, you end up purchasing another 100 toys at $1.28 with the freight of 26. Okay? So you're going to plug this number in here, right? You got the 100 at $1.28, and we're going to do the same thing. We're going to solve for the purchase price of $1.28 plus $26 is going to give me a total of $154, okay? Now, if I solve for my cost per item here, right, that's going to give me $1.54. Now, this is where I'm going to be asking you here. I have one priced at $1.50 and I have one priced at $1.54. If I'm using the weighted average method, right, I need to solve what my average cost is here. So if you have one price at $1.50 and one price at $1.54, what price point is in the middle that is okay to spread the cost amongst the evenly throughout all of your total units? In this case, right, think about it. What's in between 150 and 154?
152.
152. So that's exactly what we're trying to do here is we don't care that my first batch is $1.50. We don't care if my second batch is $1.54. We're trying to find a price point that fits right in the middle. Now, what is the best way to do that? Well, first off, solve for your total because we know that this is the end of the accounting period, right? We know that on June 15, that's when we are going to take our physical inventory count and figure out how many items we have left. So that means we've reached the end of the accounting period, so we need to tally up our totals. We have a total of 200 here, and we have a total cost of $304. Now, to solve for my average cost per item, right, my formula is going to be my total cost of $304, and we're going to divide that by my total quantity of 200 items. So then let's go ahead and punch that number in, and you will get that $1.52, which is the price point that's right in the middle between these two batches of inventory. Okay? And that's how we're going to calculate the average cost, because in this case, one is priced too low, one is priced too high. Let's just figure out the price point right in the middle so then we don't get too much of a profit or we don't lose out too much on a profit, right? We go right into the between the middle, okay? So now that I have this number, right, I can now go ahead and plug it into my my bottom half of the inventory worksheet, okay? So again, I plug my numbers into my net purchases like usual, okay? And because I don't have a beginning inventory, my net purchases becomes my goods available. Now, because I've already solved for my average cost per item, it's going to cost me $1.52. Now, this is where it becomes so easy because at this point, you are going to be given either the ending balance or how much you sold, right? In this case, we've been seeing that we were given that 80 units were left over at the end of the accounting period, right? So in this case, all we have to do is solve for my cost of goods sold. Well, 200, right, and I have 80 remaining is going to give me 120. Now, because I've already solved for my average cost per item, this is where it's easy because all I have to do is simply multiply my cost of goods sold or my ending balance by that average cost per item. And that's going to give me my total cost of goods sold. So in this case, 120 times $1.52, right? That's how much each item is going to cost me because I'm looking at the overall total batch of inventory. That means I'm spreading all of my costs evenly through the total quantities. That means every item, no matter whether it's my beginning, whether it's my ending balance or whether it's what I'm selling, they're all going to be the same price point. So there you go. I can solve for my and my cost of goods sold. So 120 times $1.52 gives you 182. Or I can simply solve for my ending balance, which is the 80 times $1.52 to get me my 120,160. So in this case, this is so much more easier because now you don't need to worry about which batch came first, which batch came last. All you care about is just one number, and that's the average cost per item, because that's going to get you your answer really quick. Okay? Any questions? This is the easiest one. Okay. Well, now that we solved this, right? We also have to do our periodic inventory conversion. So it's exactly identical. The only difference is the numbers that we calculated. Since, right, the inventory worksheet allows us to calculate all of those numbers, all you have to do is plug them into your journal, right? Well, what happens when you have beginning inventory? Okay, so in this case, from the previous scenario, we had 80 toys costing at $121.60, right? We're going to carry it over to the accounting period. So we know that for a fact that we have 100 and that we have 80 units at 121 at 121.60, right? That's what's going to be carried over to my beginning balance. Now I'm going to continue doing my purchases of inventory, and what I'm going to do here is I'm also going to combine the two to recalculate my average cost per item. Okay, so again, you're going to continue on with your purchases of inventory, of course. So in this case, right, we purchased another 100 at $1.27. Okay, plus 25 gives you $1.52. So that should give you $1.52. But you don't need to solve for it because at the end of the day, right, you're going to end up combining the previous batch of inventory that you carried over from the previous scenario. So that in that case, right, you already know your cost per item is going to change regardless because you have old inventory. Okay? So at the end of the day, you don't even need to calculate it. And then when you make your second purchase, right, you're still not going to calculate your cost per item because right now it doesn't even matter. Okay? So right now I just purchased another 100 units at $1.30, right? Plus 26 gives you 156. So once again, you need to now solve for your total costs here. So again, you purchased a total 200 units at a grand total cost of 208. But you do not need to solve for the average cost here because now you also have to add your beginning inventory. So you figuring out the average cost here is only giving you your average cost for your net purchases. But in this case, we have beginning inventory, so this number wouldn't even matter even if you calculated it ahead of time. Okay? So now that we plugged in our net purchases, right, we now need to add together our beginning inventory, which we had 80 units at $121.60, right? So then now that's going to give me my net purchase, right? We bring down our net purchases. That's going to give you my goods available to be 280 units at a grand total cost of $429.60. This is the numbers that you're going to be using to calculate your new average cost per item. Okay, is the numbers that you're going to get from your goods available because we're combining all of the batches together instead of just separating my purchases and then my beginning. They're all combined together. So in this case, that's where you're going to go ahead and go into your table here and figure out what that average cost is. Okay. And of course, we were also given that you have 60 units at the end of the day, so your total cost of goods sold quantity was 220. So again, now let's go ahead and figure it out. If you have a total quantity of 280 units and you have a total cost of $429.60. Now solve for your average cost per item. And in this case, you're going to take your $429.60 and divide it by your total quantity of 280, and you're going to get $1.5343. Okay? And that is where our equal round is going to come into play heavily, because especially with average costing, right? You're always going to get a number that isn't even, because you're constantly adding your total cost, right? And that divided by this total number of units that you're trying to spread it evenly across, you're not going to ever, it's very rare that you're going to get an even rounded number, okay? This is where we're going to teach you how to use that formula to get the answer that you are looking for, okay? So in this case, right, all I need to do now is, well, if I sold 220 units and I know what my average cost is, if it's $1.5343, that's going to give me a total of $337.54, okay? Or I can solve for my ending inventory by taking 60 times $1.5343, and that should give me roughly $92.06, okay? So again, or you could just subtract your goods available minus your cost of goods sold to get your ending balance, okay? So at the end of the day, this is the most easiest, because you don't need to even think about what batch came first, what batch came last, right? All you care is about looking for is the average cost per item, and you'd be able to solve for any of the two numbers that you have here, okay? And they're both going to give you the equal quick results at the end of the day, right? And again, you're going to plug your numbers in. You have to also include that beginning balance there, and that is pretty much it. Any questions in regards to weighted average? Yes.
So we close the period,
Mm-hmm.
and then when we carry over leftover to the next period,
Mm-hmm.
The average cost for what we have left with will change.
Absolutely, because if you're
Okay.
making more purchases, then that number doesn't even matter anymore.
Okay.
Mm-hmm.
So once we close at the ending period,
Mm-hmm.
then we recalculate the average cost with what we have left with what we are buying for that period.
Yeah.
Okay.
Mm-hmm. Okay. So let's take a look at and sum up what the differences does, okay? So in this case, we took a look at FIFO, LIFO, and weighted average. Notice this, under FIFO, right, when we calculated our cost of goods sold, this is what our results ended up being, right? We end up costing out our cheaper items first, and then resulted in more inventory at the end. Where my FIFO, because I sold all of my expensive items first, because usually as time progresses, your cost per item is actually going to go up versus going down, right? It's very rare that it will go back down. So in this case, I end up costing my more expensive inventory first, but I still had a remainder of the lower cost of inventory at the very end of the day, where my weighted average actually resulted something that's right in between, right? I'm not getting too much of a profit, or I'm not losing too much of a profit. I'm getting it right in the middle. So in this case, that is what the difference between the three methods are. Now, at the end of the day, if you're constantly selling your inventory towards the very end, then at the end of the day, your profit margins are all going to even out at the end. Because if you choose to sell your more expensive inventory now, you're going to get your greater profits at the end of the business, you know? Where if you use FIFO, You may cost your cheaper materials now, get your profit now, and then gradually start losing your profits later. At the end of the day, you're still going to not break even, but you know what I mean? You're still going to either have a good chance of getting high profits, but also hit that low profits. It just is the matter of time. Now, out of these three methods, right, you have to choose which one is best fit for your products that you are selling. Now, again, I told you this, right? Most commonly, groceries should be on a FIFO inventory, right? Because again, I used milk for that instance, right? You are not going to be selling your oldest milk last, okay? You're going to sell those first. So again, it just really depends on what products that you're selling. If your items have a longer shelf life, then yeah, you can get away with LIFO. Or if it's something that you don't really care about, if it's a resource that you're constantly selling and you're constantly purchasing back again, maybe finding an average price point or a cost point is in your best benefit, right? So at the end of the day, it does not matter which costing method is going to result you in a higher profit, right? At the end of the day, they're all going to pan out to be similar and even. The only difference is which method works best for the products that you're trying to sell is the main idea here. Now, here's a rule of thumb that you need to know as well. Once you establish your costing method, you have to be consistent, and meaning that you got to keep using that same method throughout the rest of the business career, right? Why? Here's what's most important, because this is how you're measuring your profits, right? You're measuring your profits and how much it's costing you to obtain these items and turning around and selling them. So if you keep changing your costing methods, you're not going to get a consistent, accurate, result, right? Because you're going to have fluctuations in there, and that way you won't be able to pinpoint whether you're making a true profit or not. So that's the rule there. But yes, you can try out, maybe FIFO works best for me, and maybe a year down the line, you want to switch to LIFO. Now again, if you do switch your costing methods, you have to do it, of course, depending on your accounting cycle. It is recommended that you try to do it once, okay, at the end of a whole entire accounting year, just because you want to start fresh. But again, that means you have to report that to the IRS and get that approved, okay? Because again, the IRS needs to make sure that they can audit you and making sure that they know what method that you are using. Now, you should not do this. You should not change it every single year. The IRS will also give you a cap limit on how many times you can change it as well. So again, the best way to think about it is, if you're selling perishable goods, your best bet is FIFO. If you're selling long life shelf or maybe electronics that you tend to sell your newer stuff first, LIFO would probably be your best bet. If you don't care what the price point is, and especially this too, even if you have groceries, you can use the average costing, because think about it, right? If you're buying bananas, right, and you're buying them, right, and you have to throw them out at the end of the day, you're not losing too much out there either, because you're taking the average. So again, a lot of businesses, right, will use the average costing because of how complicated it is to have to keep track of all of your batches of inventory. Now imagine having to do it for a store like Walmart that sells almost everything, right? How tedious and how much work do you have to put into it when you have to think about, oh, I sell my groceries, they have to be FIFO. Oh, I sell my household appliances, those have to be LIFO. And then I sell water, I have to make that average costing. They might just be like, you know what, let's just keep it all consistent and just have them all cost out at an average costing. It's just easier. Okay, so again, these are just what the business models can do, all right? And that's what the business can. They can't have the option to choose between FIFO, LIFO, and weighted average, okay? All right. Okay, so course review, right? When we talk about FIFO, right, we're talking about getting rid of our first batches and then slowly go down to our last batches. So in this case, best way to think of it is FIFO, you're just going to start from the first batch and make your way down to the bottom, okay? LIFO, we start from our last batches, right? So that means we're going to start from the bottom and slowly make our way up to the top. Where our weighted average, we don't care. All we care is what is the grand total cost and what is the grand total quantity and solving for the average cost, which is going to be the price point that's right in the middle. So in this case, we don't care about going from top to bottom or bottom to top. We care about what the end result is. Okay. All right, so let's go ahead and go through our first exercise, and then we'll take a quick break, okay? So here is the first 5.6 exercise, okay? This time, right, number 1 says your inventory, excuse me, your inventory method here is going to be weighted average, okay, and it's periodic. So here on April 5th, we purchased 1,000 units at $5 each with the freight costing $100. So for these scenarios, since we've already practiced how to journalize these transactions for FIFO and we just did it again for LIFO, I only want you to focus on plugging the numbers into the inventory worksheet because again, they're all identical when journalizing. So you don't need to keep doing that, right? We get the point. So I want you to practice looking at this and plugging it into your inventory worksheet. So in this case, on April 5th, we purchased 1,000 units at $5 each with a freight of $100. So inventory worksheet number 1 is April 5th. We purchased 1,000 units at $5 each with a freight of $100. So in this case, what is my total purchase price here?
5,500.
5,500. No.
1,000 times $5 is 5,000.
Yes, it's 5,000, not 55,000, not 5,500. Okay. So in this case, and then my total cost of 5,000 plus 100.
5,100.
5,100. Now, because let's just assume this is the only batch of inventory that we're gonna have. What is my average cost per item for this batch?
510.
It's going to be the $5.10, okay? Again, since we already know that we're going to be making batches of inventory, you don't necessarily need to solve for the cost per item, right? You just need to solve for the average cost. So then April 10, we purchased 750 units at $5.75 with a freight of $75, okay? So here we are, it is April 10, okay? We purchased 750 units at $5.75 with a freight of $75. So what is my total purchase price here?
$1,312.50.
$4,312.50 plus $75 gives me a total cost of
$4,387.50.
good, right? So let's see what's next. Next here, April 20th, we purchased 200 units at $6 each with a freight of $20. Okay, so 420. Okay, 200 units at $6 each. Okay, with a freight of $20. Purchase price
$1,200.
$1,200 plus $20.
$1,220.
12.20. And let's see what my last purchase was. So April 25th, we purchased 500 units at $6.25 each with a freight of 50. Okay, so sorry. All right, so we have April 25th, right? We purchased 500 units at $6.25 each with a freight of 50.
Purchase price is 31.25.
Plus 50,
175.
31.75, right? Yes, these are all the same exact numbers from the first 2 days that we've done this, okay? All right, so now last piece of information we have here is that on April 30th, we end up having a total of 600 units on hand, okay? So that means that we reach the end of the accounting period on April 30th. So in this case, I have a total of 600 units on hand. So in this case, I know that for a fact that I have 600 in my ending balance. So now let's go ahead and figure out what my totals are so I can go ahead and plug my numbers into my bottom half of the inventory worksheet. Okay? So in this case, what's my total quantity? How many items did I purchase in grand total?
2,450.
2,450, okay? What is my total purchase price?
Is 13,637 and 50 cents.
Good. And my total freight?
Was $245.
Good. Giving me a grand total cost of $13,882.50. So in this case, right, since we know we don't have beginning inventory, you can solve for your average cost per item right here because we don't have a beginning balance. Or you can choose to wait till we reach the end here where we get our goods available to solve for my average cost per item. It's up to you. At the end of the day, you're still going to calculate the same exact average cost per item. Okay? So in this case, you know what? I'm going to skip that until we reach our goods available, and then we'll solve it right there so we can solve for the rest of the cost of goods sold. So in this case, right, I purchased a total of 2,450 units at $13,637.50. In this case, I don't have any purchase returns and allowances, so that should subtract nothing, okay? And then, of course, my freight, right, because it doesn't add to my quantity, but it does add to my cost, right? The $245 adds to my cost. So in this case, right, that's going to give me 2,450 units at a grand total cost of $13,882.50. Right? We already know that. Now, again, as I mentioned this, we don't have any beginning inventory. So when I carry my net purchases, what happens here is my net purchases actually becomes my goods available, right? And of course, since you have this information here, you can go ahead and decide. Let's solve for my average cost right now. So right now, I have 2,450 units at a total cost of $13,882.50. So let's go ahead and solve for my average cost per item. How much is it going to cost me to sell one item?
5.666326.
Okay, let's see. Okay, so 5.66 66326. Okay. All right, good. You can have as many numbers as you want to display, but I said if you're using a calculator, 6 numbers after the decimal will give you the best rounded number. Okay. So that's how much it's going to cost me for one item that I sell. So in this case, right, if I had a total of 2,450 units, and I have 600 left on hand, my assumption is I must have sold how many units?
1850.
You must have sold 1850. So once again, 1850, right? I can now solve for my how much it's going to cost, what my total cost of goods sold is. Because I have my quantity of 1850 and I know what my cost is, right? It's going to cost me 5.6663265, right? So this is the formula if you are going to be using the Excel to calculate this, this is the formula you're going to be needing to use, okay? And I do use this formula quite frequently throughout the rest of the accounting class, okay? It's going to be equal round, okay? What does equal round do? Well, it's just like in math, right? It will round the numbers to the nearest decimal point that you designate it to be, okay? It will carry out any calculations you want, and you can tell how many decimal points you want it to round to. So for instance, right, I want to know what the result is if I multiply my quantity of 1850, okay? And I'm going to multiply it by my 5.66666632265, right? I want to know how much that is going to cost, how much it's going to cost me, right? And I want it rounded to the nearest penny because, again, I can't charge my customers a sixth of a penny. I can't charge them a quarter of a penny either, right? I need to find a number that is feasible because, again, your journal is in terms of dollar. Can I charge or can I pay half a penny? No, you cannot. So you have to round it to the nearest penny to get a better accurate measurement. So in this case, when you use your equal round formula, what is the arguments? It's only 2 components, right? What the formula that you're calculating or the equation that you're calculating. So in this case, I want to know what my quantity times my cost per item is. I'm going to end that argument with a comma, okay? And then the next argument is going to be how many decimal places do you want to round the number to? In this case, I want to round it to the nearest penny. So that means for pennies, right, we understand that it is rounded after 2 decimal places, right? So in this case, that's exactly what I want it to be. I want it to be rounded by 2 decimal places. Now, in most formulas for Excel, you can do without ending the formula with the parentheses. So you can just go ahead and straight away press enter. And now I get the result of $10,482.70. Now, of course, you can format it how you like on your Excel. So that's how much it cost me. Now watch this, okay? Because I told Excel to round this number to 2 decimal places, watch what happens when I expand it. That means it cuts it off at 2 pennies. It will only show me 70 cents and it's 0000 after. Now, what happens if I actually did not use that equal round? Well, if I just go ahead and do my calculation straight away, it will tell me, okay, well, it is going to be $10,482.70, right? Because I formatted that cell to show me this. But if I go ahead and actually display all of my numbers, right, if I expose how many decimal places, it's telling me it's actually 70.40816. It's telling me that there's 0.4 pennies in there. And that's what you don't want, because you can't charge anybody 0.4 of a penny. You cannot pay anybody a fourth of a penny or 0.4 of a penny. Okay? So in this case, that's exactly why I do want you to do this, because this is the best bet too. Now, what if I actually chose to have this number rounded, right? Let's say I chose this number to be 5.67, right? That's how you round the number. And I multiply it by this. If I were to do this, watch this. If I choose 1850 times that $5.67, it's going to show me that it's going to cost me $6 more, right? You see that it's $10,489, which cost $6 more, right? Because I'm calculating how much it costs me to sell my items. I don't ever want to spend more money. My whole goal is to save money, right? So that is why I do want you to be very careful in making decisions. Do you want to round up? Because if you round up, it could hurt your profits at the end of the day. Okay? Where if I don't choose to
Leaving
round,
one item.
Hmm?
You actually throw one item away, essentially, is what you're doing now.
Exactly, right? If you really take a look at this, right? That difference is $6. That means I gave a one item away essentially for free. And that's not what I want. I want a more accurate and more a more accurate price point for me to charge for me to calculate the cost. And that's why I am teaching you this, because as a small business, every penny counts, even those half pennies, okay? But for a corporation, what is 1 penny difference going to make? Is $6 going to be a huge deal to a corporation? No, that's chump change for a corporation. They can care less, because they could probably make up those profits 4 times quicker, because they sell a billion different other products. Where a small business like us, every single penny counts. So that is exactly why I'm going to be teaching you to use the unrounded number, and I want you to round your total cost at the end of the day, because this is what you're charging yourself, right? This is how much it costs you to sell an item, and you cannot charge yourself 0.4 of a penny. Okay? All right? So other than that, that's exactly what I want you to do. Okay? Now, I can also do the same thing here too, is what if I wanted to solve for my ending balance? Okay? If I wanted to solve for my ending balance, okay? If I wanted to solve for my ending balance of 600 items, right, costing at $5.663265, right? And I entered in that same exact formula, okay? So equal round, okay? I want to, the first argument is my equation. I want to know what 600 times that 5.6663.265 is. I'm going to end that argument with a comma, and I want this to be rounded to 2 decimal places, right? Enter. That means my total amount here gave me $3,399.80, right? And I can also do the same thing here, right? I can take this and subtract that and get the same exact answer. So at the end of the day, you can choose to do either or, whether you do the calculation for ending balance or for cost of goods sold, because in this case, if you're using this formula, now you have to be careful once again. If it was actually 6.665, that's where you have to be careful which side you're going to be rounding up, okay? But in this case, you don't see anything like that. This one is a perfect example where you won't come into that problems where you have to really microscopically look through it and be very detailed. In this case, it panned out evenly. When I rounded on both sides, it rounded them up evenly to equal my total goods available. Okay? And that's it. Simple and easy as that. Okay? And of course, I need to finish this equation off with my conversion entry. Okay? So it is April 30th. How do I record my conversion entry?
Inventory and cost of goods.
Inventory and cost of goods sold, as well as purchase expense and of course freight expense. Okay, because we are trying to convert my expenses into inventory, but at the end of the day, the amount of items that I purchased was 2,450. I realistically only have 600 left. That means I have to distribute all of my purchase expenses between the two accounts right here. So in this case, what was my ending balance in my inventory, my ending inventory? What was the total value?
$33.99.80.
Good. What was the total value of my cost of goods sold?
$10,482.70.
Okay. What was the total value of my purchase price? Total value of my purchase price.
$13,637.50.
Good. And then last but not least, what was the total value of my freight? It was that $245. And then of course, rule of thumb here is to ensure I didn't make any typos here. I got 13,882.50 on the left. And of course, I got 13,882.50 on the right. Okay. So again, that is it for weighted average for the first part. Okay. Any questions?
I could do this all day.
This is the easiest one. It's the fun one. Okay.